As we wind down to the end of October, it's looking as though this could well be one of the worst months for global benchmark equity indices since the financial crisis. Let's take a look now at last week's trade of the week and a look ahead to this trade with Josh Mahony. Josh, last week we went long Dow with Chris Beecham. Now, he had some very good reasons for doing this, but clearly, as I just said, it's looking as though we are winding up to be one of the worst months in a number of years on the equity indices. It didn't go right at all. Almost from the outset, it looked like it was doomed.
Yes, it's a difficult one. Look, the market keeps going down, right? So when you just say, okay, I'm going to buy because for me it looks cheap, it's a lot easier to be in that position where you're like a holder of stocks, right? Where you think this is cheap, and I think after, you know, say a month, we're probably going to be back to all-time highs, right? It's a lot more difficult when you're trading it from a sort of spread betting perspective, because you obviously have to be able to put your stops in and the like. You can't really let it give it the same kind of breathing room. What we have seen last week is the fact that if we look at, say, Monday, you can see that we were holding up around about that 61.8 and the 200-day SMA. What happened was we then got the next leg down into the 76.4 retracement. Now, for me, I still think that it looks relatively attractive. Like I said, it's harder to spread bet these kind of things than it is to you know, grab, let's say, a handful of shares with the idea that the markets will soon enough turn around. I certainly think that this is not necessarily the beginning of this huge crash. I think that that's exactly what we're seeing. We're seeing a pullback coming off the back of a period that actually, if you look at the wider context, we were seeing deep retracements. We weren't seeing it all trading one way. Each time we were coming back into, you know, not even 76.4 retracements, we were coming past that in the first place. And then all of a sudden we came on this run, and you can see the pullbacks were absolutely minimal. So at some point, we've got to take a decent amount back from that. That's exactly what we've been doing now. And we've seen this come into the 76.4, much like we saw time and time again in the past. And we've seen that deep retracement now. But I think that we're likely to start seeing the buyers come in. So yes, Chris, on this occasion, was hoping that this market would hold up at the 61.8 and start to reverse higher from here. But we saw that next leg lower, and the 76.4, that's the final sort of bastion almost. We've got this ascending trend line coming into play. We've got that Fibonacci. We're starting to see some strength. Certainly in Europe, we're starting to strengthen a little bit more at the moment. You know, whether that's a case of the fact that we've got weaker currencies here in Europe, whether it's the case that actually US markets haven't opened for the week, so maybe we're going to see a strong start to the week. I think we're likely to start seeing some strength come into play. The question mark is, are we going to see some sort of retracement here? Bear in mind, we've seen that strong leg lower, or are we going to see an all-out recovery?
So what's your trade for this week?
So I was actually thinking something very similar, and, you know, I don't necessarily want to, you know, it takes a fool to be making the same mistake twice. Not that it was my trade last week, but certainly, you know, people that follow me know that I like to be playing on these deep retracements, looking at the likes of the 76.4 and the like. Instead of the Dow, I think the interesting one here is the S&P. Let's just take it out into the S&P here. I'll show you on the weekly time frame. If we see this in the context of this creation of higher highs, you can see we broke through that previous peak to post the all-time high at 29.40. Then we pull back. Look at these moves towards the downside. Big, strong candles towards the downside. What happened? We absolutely marked the bottom at the 76.4 alongside this ascending trend line that was essentially completed with that third touch that we saw last week, which marked the low of the week, and the 76.4, like I said. So one way of playing it, if you were there at the time that we marked the low, you could look for a buying opportunity at that 76.4. So if you bought it at that 76.4, then okay, perfect. But you know, that would mean you'd have to catch the absolute low of last week. I don't necessarily think that many people would have done that, quite frankly. Let's just look at it on the shorter time frame and see exactly where we are. So, like I said, if you look at that 76.4, it's absolutely perfect the way that we've rebounded from that. And now we're starting to see some strength. Certainly, if you look at this in sort of isolation, you're going to say, well, actually, we're still trending lower, right? So the way that I look at this is certainly, if we look at that wider context, we're not going to be able to place this trade based on taking it at a 76.4, putting our stop below this 25.31. The way we can play it, though, is if we take it back to this 4-hour chart, we can look for the break through this level here, 27.23. that would give you greater confidence that we're not going to see another retracement before we sell off and that we're going to move into a bullish phase. The fact that we're taking it here, we're going to be looking for stops below this level here, 26.27. So for me, I think if we break above this level, considering we've respected this 76.4 retracement, I think there's a good chance that we're going to see substantial upside coming into play and people starting to think that this is the end of the sell-off, quite frankly, considering we've come into that trend line support, we've come into the 76.4. So looking for a breakthrough 27.23 to go long on that level and then essentially putting our stops below the 26.27 mark. So I'd say 26.20 would make a little bit of sense, giving it a little bit of space towards the downside. Yes, we have got a decent sized stop, but also I think there's a good chance that this is going to be the beginning of a sort of wide ranging. Maybe it will take longer than a week, but I do think we're likely to have marked the bottom for this market. And certainly if we break through that 27.23, it's going to give me a lot more confidence that we are going to start breaking higher rather than continue the trend that seems to be in play at the moment.
Okay. All right, Josh, thanks so much indeed. So that's this week's trade of the week for the week starting Monday, the 29th of October, which is long S&P with a stop at 26.20.